Define for the real market what use of growth is, the perception of what growth will be out there, like someone like Amazon.
Well, we are free cash flow investors, and one way to tell if a company is a good steward of cash, which is our profit, owning a company, is return on invested capital. And we've had a period because of COVID where growth companies have done incredibly well, particularly those that are internet related or work at home related, like Amazon. The issue is that Amazon puts in $1 and really gets maybe $1.05 back. It's not particularly efficient at investing money, but it's been rewarded for this revenue growth in a period where the economy has been shut down. So that's really been the story of the market from January, really from the COVID in February through September 30 or so. Since the vaccine in particular, since the trials came out in November, Amazon has lagged and growth stocks have lagged. Now, retail investors still love this revenue growth, but now we're focusing again on companies that can sustainably grow profits. So there has been a change in the market.
David, this is delicate, but it is of the moment, and I want to go to this. It's just so important. On these IPO frenzies of right now, I'm going to assume Epoch is not participating, and we see what to me is almost a manufactured scarcity of equity issuance creating a frenzy. Where you sit, does the government have to step in to somehow adjust this manufactured frenzy of limited equity issuance?
No, it's just the cycle that we're in. Unfortunately, again, we've been in a bubble reminiscent of the 1999 dot-com bubble. Again, in a period where growth is scarce, interest rates are near zero. So, when you do a discounted free cash flow, a fast-growing company is worth a heck of a lot more, even if it barely makes money today. So this is the period we're in. You could see Bitcoin doing the same thing. It will correct. It will end badly, I hate to say. But the good news is the market actually has been broadening out over the last month and a half, and we're getting back to fundamentals to a greater degree. That, again, will not stop the excitement and sizzle of these very high growth companies that go public. But I don't think that will be the case for the market going into next year, particularly the second half of 21 and forward. We're going to go back to companies that, go with the economic growth of the economy. So we're going to move broader to cyclicals in particular, whether they're consumer discretionary or industrials.